Now let us see the topic of tax deduction at source. It is most commonly known as TDS. That is, the income tax department gives some kind of responsibility to the drawing and disbursing officer or any other person liable to pay to the assessee or any other person. Number 1, section 192 deals with tax deduction at source from salary, and it from the salary when it being paid to various employees, the DDO is responsible to deduct the amount of tax at source. Section 192A deals with premature withdrawal from employees provident fund. It says that any person authorized under the scheme to make payment of accumulated balance due to employee are required to deduct income tax at the rate of 10%. No such deduction is made under this section if the amount of such payment in aggregate is less than rupees 50,000. Section 193 deals with interest on securities. The interest on securities, the rate at which the tax is deductible under section 193 is 10%, both in the case of domestic companies and resident and non-corporate assessees. It is not applicable in certain specified securities. Section 194 deals with the dividends. The rate of deduction of tax in respect of dividend is 10%, but it is not applicable if the dividend income is received from companies and which does not exceed rupees 2,500 during the year. Section 194A deals with interest other than interest on securities. The rate at which is deducted is 10%, both in case of resident, non-corporate assessee and domestic companies. No deduction of tax shall be made if the aggregate amount of interest paid does not exceed rupees 5,000. Rupees 10,000 limit is given in respect of interest paid on time deposits with a banking company. Winning from lotteries, crossword puzzles, horse races, etc., the paying authority is required to deduct income tax therefrom at the rate of 30% if the amount of payment exceeds rupees 10,000. Payment to contractors and subcontractors under section 194C. The rate of TDS under section 194C on payment to contractors is 1% where the pay is an individual or HUF and 2% in respect of other kinds of persons. No deduction will be required to be made if the consideration for the contract does not exceed rupees 30,000. Insurance commission under section 194D, such person is required to deduct income tax at the rate of 5% if the amount of such income or the aggregate of the amounts of such income credited or paid during the financial year to this account exceeds rupees 15,000. Payment in respect of insurance policy, section 194DA. Section 194DA provides for deduction of tax at the rate of 1% or on any sum paid to a resident under a life insurance policy, including the sum allotted by way of bonus, which are not exempt under section 10D. Tax deduction is required only if the payment or aggregate payment in a financial year of an assessee is rupees 1 lakh or more. Payment to non-resident sportsman or sports association, the person who is making the payment is to deduct TDS at the rate of 20% from such payment. Payment in respect of deposits under National Savings Scheme, the person responsible for paying to any person any amount from National Savings Scheme account shall deduct income tax thereon at the rate of 10% at the time of payment. No such deduction shall be made where the amount of payment is of the aggregate is less than rupees 2,500. Repurchase of units by mutual funds or Unit Trust of India. A person responsible for paying to any person any amount on account of repurchase of units covered under section 80 CCB shall deduct tax at source at the rate of 20% at the time of payment of such amount. Commission on the sale of lottery tickets, etc. Section 194G makes that the person responsible for paying to any other person any income by way of commission, remuneration or prize exceeding rupees 15,000 shall deduct income tax thereon at the rate of 5%. Commission or brokerage, section 194H says that any person who is responsible for paying any income by way of commission other than insurance commission or brokerage shall deduct tax at the rate of 5%. No deduction is required if the amount is less than rupees 15,000 during the previous year. In general, we can say that 10% is the rate for TDS. And the person who is doing the tax deduction of tax at source must issue a certificate for that is the deduction of tax at source. Section 197 also discusses the certificate for deduction of tax at a lower rate. You can refer to the study materials for detailed discussion of this section, and also section 204 where the person responsible for paying tax says will deduct at source. Now let us see the tax collection at source under section 206C. Under section 206C, subsection 1, sellers of certain goods are required to collect tax from the buyers at specified rate, with the specified percentage of collection for taxes are provided for certain categories of items like alcohol, it is 1%, trendu leaves, it is 5%, timber obtained under a forest license 2.5%, timber obtained by any other mode is 2.5%, any other forest produce not being timber is 2.5%, scrap 1%, and minerals being coal or lignite or iron ore, it is 1%. So there is a difference between the terms TDS and TCS. In case of TDS, it is tax deducted at source, and from the income, the person who is paying the income will deduct the tax at source. On the other hand, tax collected at source is that here that certain sellers of certain goods are required to collect tax from the purchaser of such goods.